Hi everyone, it's Jennifer Butcher with the Butcher team. A common question that I get asked from my customers when they call to get pre-approved to purchase a home is about credit score. Why do I have a 660 credit score? How do I get over a 700? Seems to kind of be that magic good credit score number. How do I get in the 700s or the 800s? So today I want to talk to you starting with the top 3 credit tips on how to maximize your credit score and really what makes up a score. How is it determined? The number 1 piece of a credit score is your payment history. It actually makes up 35% of your credit score, and it just comes down to paying that bill on time. So if you have a credit card, for example, that is due on the 15th of the month, you want to make sure that you get it there by the 15th of the month. The inside secret is that it's not going to report late on the credit bureau unless it's 30 days late. So that's important to know as well, but that's not going to take away that late fee from the creditor if you pay it even a day late. So my tip for you is, I always use my Target card as an example. I feel like I get the Target bill, and it's due a week and a half later, and it's never falls in my normal beginning or middle of the month time when I paid all the rest of my bills. So I finally had to buckle down and just put it on auto pay because I kept forgetting about it. So if you have a bill that you just can't remember, put it on auto pay or put a reminder on your calendar to get that bill paid, because if you do have a late on your credit report, it's kind of a hard thing. You don't really erase it. Time has to heal it. It's not a quick credit repair fix. So pay your bills on time. Number 2 is credit utilization. Makes up 30% of your credit score. And I tell people about this and they have this aha moment. So it all comes down to revolving credit, which is your credit cards and how you're using them. And it's about the balance to limit ratio. So if you have a credit card with a $1,000 limit on it and your balance on it is currently $900, you're flirting with the maximum on that credit card, and it's not going to help your credit score. It's actually going to hurt you. So the general rule of thumb is to try to keep your balance at or under 30% of whatever your limit is. And if you're in a place where you're really trying to boost your credit score and increase it, I would recommend 10% of that limit. So that same $1,000 limit credit card, no more than $100 in that whole pay cycle. Another misconception is I pay my bill off in full every month. It doesn't matter. Yes, it does, because the credit bureau is going to pick up that high balance. So you just want to make sure that the whole pay cycle, you're keeping it underneath that limit of where you want to be. Number 3, the length of history of your credit cards and loans that you've had. This is another common question I get. People call to get pre-approved to purchase a home, and they say, should I close these credit cards? I still have that Gap card or that Buckle card I opened in college. I don't use it anymore. Should I close it? The answer is no. Don't close any credit cards before you're going to get pre-approved. And the reason is it kind of erases that payment history, and it actually will probably decrease your credit score for the short term. So if you've got a card that you've had for a long time, maybe charge a tank of gas or a bag of groceries on it every 6 months or so, just to keep it active and to keep that history there until you've got a card that you really like to use and you've had it for a couple years and you've built up that history. Any other questions, give me a call. Please stay tuned for our final 2 tips on how to maximize your credit score. Thank you.